Hey, everybody, this is Kevin, a CPA that does financial planning. If you listen to the Pilot Money Guys podcast, I'm called the professor. And so they've asked me to dig into this guaranteed, variable, universal life insurance that SWAPA is offering all our pilots from Southwest. I say all are, but I'm not a part of Southwest Airlines. So Charlie Mattingly, one of the co-founders of Leading Edge Financial Planning, he took the VSP from Southwest 2 years ago. He did have life insurance at Southwest, and he did transition, had some life insurance outside already, but did transition more with life insurance when he left. Rob Eklund, captain extraordinaire, just became a captain. Congratulations, Rob, out in Denver. So we do have multiple people on our team that have been affiliated with Southwest. We also have pilot financial planners from FedEx, NetJets, American Airlines, and maybe I'm forgetting somebody else. But anyway, so we understand that, especially for pilots, if you have a bad medical and you have to leave the airline and you don't have other insurance on the outside, that can be devastating. And the word in the insurance lingo is portability. So portability means I'm at this place, I'd leave, and I can carry it with me. It's portable. So that's one of the benefits they're selling at SWAPA, and it's absolutely a benefit of this product. You can take it with you, which is fantastic. An alternative to taking insurance with you is right now, today, I know this is exciting, but go get a term policy outside of Southwest Airlines. Very inexpensive if you're younger. If you're older, it's pretty inexpensive. I got a new insurance policy 2 years ago, and I'm a little chubby, just saying. So, but it was still fairly inexpensive. And the reason I had to get another policy is that my 20-year term expired. So my term policy expired before I did, which is the way you want term life insurance to work. So I'll just tell you this. It was funny. My wife says to me, you're getting new insurance. How come? And I said, well, Chris is, at the time he was either 15 or 16. I said, and it's just good to have insurance for another 10 years. So when I had gotten the first policy, Chris was not born yet. So I didn't know I'd have an insurable interest right now, which I do. So that's the thing with most insurance, is that you want to have an insurable interest. And this is a fancy way of saying, if you went out and bought home insurance for your home and you didn't own a home, why are you buying home insurance? If you have a car insurance and yet you live in Manhattan and you walk the streets of Manhattan, you have no car, that would be kind of dumb. So this whole idea of permanent life insurance for the rest of your life, when you're 80 or 90, you might not need to have insurance because you might not have an insurable interest. So, but anyway, that's something that's sold, and for some people, permanent life insurance is absolutely the right thing. So let's dig into just first of all, who should strongly consider buying this product? Well, what we believe, we've talked all about it at Leading Edge Financial Planning. This is a great product if you do not have enough insurance. You're working for Southwest Airlines as a pilot. You don't have enough insurance, okay? You've maxed out the term that you can get at Southwest Airlines, but you need more insurance. There's no medical for the next 30 days, and you can get the insurance. You're guaranteed to get it. That is who we think this is right for, potentially, because you're underinsured. Now, if you don't have a medical problem right now, you could also, an alternative would be to get term policy outside of Southwest Airlines. You just go online, call somebody. These are really commodity type products. Commodity being like, hey, they're low priced and they're competitive. One company is competitive with the other. But anyway, those are the people that we think might benefit from this. Now, as far as this two benefits, understanding GVUL, I thought the presentation that SWAPA put together was very good, but I think it's a little bit more complicated than that. So if you're still with me and you're excited about getting an insurance product that can also double as an investment product, you get to save on taxes, then I'm going to tell you a little bit about what universal life insurance policies are. So this is from policyme.com blog Universal Life. So you can check this out for yourself. So We all know what term policy is, right? You get a 20-year level term. You pay the same every single month for the rest of that term. When the term expires, hopefully before you do, you get nothing. That's a term. Whole life is you pay for the rest of your life, and someone will absolutely get a benefit if you continue to have the premiums paid. So the ease of use is pretty simple. Investing know-how, you don't need any. They're just going to give you a guaranteed return. Universal life insurance, the flexibility of the universal life is really the benefit of it, and it's also the potential drawback. So I don't know if you need an experienced agent or strong investing know-how, but you will be investing in sub-accounts with stocks and bonds. And the amount of premium that you have to cough up out of your pocket, the amount of cash value you have over the long run has everything to do with how your investments or your sub-accounts do. So it's more complicated. I wish this was a no-brainer. It's not a no-brainer. So returns are not guaranteed in the variable universal life. The other thing about universal life, and there's a nice chart here with Michael Kitces, Nerd's Eye View, who shows that how the cost of insurance changes with age. So when you're younger, the cost of universal life insurance is lower. That's why some people called and said, hey, it's only $36 a month. This is great. And I'm like, it's $36 a month now because you're young. As you get older and older and older, the cost of insurance goes up every year. So if your investments inside the universal policy do well, then you might not have to pitch in that much in the future because your investments have grown and your cash value has grown, and you can use that towards your premiums. See, this is complicated. But as time goes on, so let's say that everything works out well. You're 50 right now, and you live to 100. So for 50 years, you're going to pay increasing premiums. And then when you're 100, you die in your sleep. It's perfect. And $500,000 goes to whoever you want it to go to. So that would be what I would call a win. The only problem with that is because the cost of insurance is going up every year, it's not like you're going to have a huge cash value. It could work out perfect, or it might not. You'll just be paying that cash value, not have to pay any more premiums. But there's always competing issues here. You know, you could take a loan against your policy, pull out the cash value, but then you better make sure that your premiums are being paid by either the rest of your money or by you, or pay back the loan. But this is one concept that people don't really understand with Universal, is that every year you get a new bill, and it's not based on your health, it's based on everyone's age that's your age, people like you. So anyway, the rate of return could be higher, but so is the risk. So it's very customizable. So universal life insurance is not simple to understand. So that was the first thing I really wanted to get across to everybody. So, you know, with the term policy, you pay the premiums, you're only paying for your death benefit. With the universal life, you're paying for the cash value, the premium, the cost of insurance, and then you're also paying for the underlying investments. And I did, so you don't have to, but you can please do, is go through the prospectus here. And the underlying investments in your account are not bad, but they do have fees associated with them as well. You can see American Funds, a good company, 0.57. So you're going to pay for your investment fees, you're going to pay for the cost of insurance and any other administrative fees within this policy. So sometimes those fees are higher than the tax savings that you might get by putting money into the policy and then borrowing against it. So I'm not going to get into the borrowing against it, but there's many articles that are written and a lot of confusion around borrowing against insurance policy. Yes, it's tax-free. Yes, the death benefit can still be there, but there are some gotchas, and you need to be a little careful with that. Okay, if you're still with me, you're either an engineer or you're really interested in this. God bless you. So here are the things that we think Southwest pilots need. Here are the benefits, here are the drawbacks, here are the alternatives. So portability of insurance. We talked about this first. If you leave Southwest with a disease, you might not be able to get outside insurance. Get it now if you're young. Get term right now. And know how long your insurable interest is going to be there. If you're a pilot 60 years of age, your house is paid for, Your spouse will be covered if you die. You might not have an insurable interest, but you might, and we're happy to help you with that. Permanent life insurance is always more expensive. We know that. There are some things that you can actually do. Charlie went through this when he took the VSP 2 years ago. He had term with Southwest Airlines. He was able to convert some of it to a personal policy. So that is something you can do. Insurance for life. Do we really need insurance for life? But as long as you make your premium, someone's going to get your benefit. When I ran through my term before I died, and my wife said, "What do we get?" I said, "Nothing." She goes, "We just paid premiums for 20 years. We got absolutely nothing." And she goes, "And you're the financial planner?" But again, that's what you want to do with insurance. You want to pay the insurance and then your house never burns down. But do you have an insurable interest? That's really the key here. Do you want to live to 100 and then leave 500,000? What will 500,000 be when you're age 100? So all permanent life insurance is more expensive. So it's really about your financial plan. What are you going to, who's going to use that money, and will they need that money at that time? So tax-free benefit to your family. All life insurance is a tax-free benefit to your family, unless you're over the estate tax limits, which right now is almost $12 million per person. It will come down to $6 million in a few years. Tax-deferred investment. This is something that's really, these are the 1-2 things that they sell insurance with. Tax-deferred. So you put money into an insurance policy because it takes care of widows and orphans. There's no tax while money is in there. Which is good. There's other ways to get tax deferral. The first way is to max out your 401k, max out your backdoor Roths, put money into a taxable account, which is not truly tax deferred, but you can use very low turnover stock funds, are tax efficient, and then you can buy term, or you could also use very low cost variable annuities. That's tax deferred. Remove cash value. You can remove the cash. That sounds great, and it is. So if you do remove cash, though, you're pulling out cash as your investments. And you can only pull out the amount of cash that you've put in. So anything that you pull out over could be taxed. Borrow against and remove your cash value again. Avoid taxes while you're alive. Lots of caveats here. Won't get into it. Start out with low premiums. Again, this is a real benefit. If you can't get insurance right now, you need insurance. You start out with $30 a month if you're a 30-year-old, I think it is. Let's see what the actual numbers are here. It's a photo. Here it is. 35-year-olds, this is from the MetLife, 6 cents for $30 coverage for $500,000. If you're age 60, it's $228. That's, like I said, the amount of insurance premiums go up as you get older, more likely to die. So that's another issue. So final thoughts. If the GVUL feels good for you, if you think it can help you, if you think it's good insurance, although you know it contains higher fees, then this is something absolutely you can purchase without a medical. That's a great benefit. You can also buy outside term right now for as long as your insurable interest will be here, and you can protect yourself that way, and you could invest the rest. Also, if people, some people, if they have an insurance policy, they'll put money in it because they also know it's for their kids, take care of their kids, their family, whoever their insurable interest is. So they're much more likely to do that as an extra, if you will. If I told you, hey, why don't you just put $50 into a taxable account every month instead, that, you might do it, you might not do it. So that's another reason that you might consider this. This is not a no-brainer. This is a brainer. This is part of your financial plan. This is not super easy. And then here's my my fourth thought when I was going through this. If you could have your car insurance or your home insurance allow you to invest money in it, would you do it? You probably would not. The only benefit of the life insurance policy as being able to invest in is there's tax advantages. And if you're in the 37% tax bracket, yes, it can make sense and it can work. But there might be other ways to do it. So we think the pilots that should consider this is not a good saver. Once again, and the policy allows you to save more, might have a health issue and cannot get affordable term outside of Southwest Airlines. likes and understands permanent insurance. A pilot that has a large taxable estate, and you've already maxed out the 401k profit sharing and even the backdoor Roth. Those are people that we think could be possible usage cases for the group variable universal life. There's 2 articles here, NerdWallet, and they talk about it, and then White Coat Investor. It's an emergency room physician that does financial stuff, excellent stuff there, and you can read a lot more about these types of policies. So thank you so much for listening. If you have more questions, please let us know. Thanks.